Good afternoon, family. How is everybody doing? Let me take a water to start this great stream, hopefully to be. How's everybody doing? Brian, what's good? Let's go. What's up, Christopher? Pokes. How are you, my friend? You're probably at work, as you always are. Good for you. Uh, Ryan, we're gonna have an idea on what this judge is waiting on. I think I have a quite a little bit of an idea on what's fixing to happen. Um, but there's obviously two cases to it, and we'll see what's up. I beat in Kenny's pool. What's up, brother? I just saw a video you posted on your Facebook not too long ago about a memory when you had a rattlesnake. Dude, kudos to you, man. You grabbed the thing with a broomstick and then by the neck, and also, wow, much better man than I am with a rattlesnake. Air Frill, what's up, brother? Christopher, how you doing, man? Casey, Casey Hogg, what did it do, my friend? Um, Mr. McCohen, how are you, sir? Great to have you in here. All right, so let's jump quickly into this. There's a lot to cover today. I really wanted to do this like probably yesterday, but there was not enough time. There was a lot of great live streams yesterday that it was just I couldn't like. There was a great live stream that Pantheon had. Most of you already know who the great Pantheon is. A great friend of mine, and to the entire community as well. Um, if you don't know who Pantheon is, go ahead, go to Pantheon's page, and it's up to the man. Brings in a very great outlook on a macro level, and is a great friend to the entire community. So, and then we had the Massalorian had an amazing stream. He's on the road. So if you don't know also the Massalorian, please go and give him a look and give him a check. But yeah, so like this week, we got so much that's happened. And of course, I alerted on the Discord most of the family that this is the earnings season. It's beginning. But there's so much that is happening. This is the week before the OPEX week. And if you don't know what the OPEX are for the options, don't worry. I'll put it all in a nutshell for you, which is basically an expiration on the options for the month. And that's happening next week. So technically, from experience, lately, last quarter and the quarter before that, the OPEX, the week before the OPEX expiration date on options has been good to the market. And obviously throughout the OPEX week, that's when the markets would have a little downturn and obviously a correction. So I'm expecting some big things to happen with the SPY and the overall market come into this Wednesday. Of course, we have the CPI data being reported. We have a bunch of Fed members that spoke today. The last one spoke at 12. And we got the credit consumer report also coming out at 3. All these things will play a big part into what's happening with the week now. But more importantly, we're going to talk about what I have seen today on AMC. A lot of people are reporting on that early morning in the pre-market thing when the ape went up 20+%, and AMC did the same thing. To the downside, and I'm gonna tell you what I've seen on a deeper level throughout the options movement throughout AMC today. Important, and no one is reporting on it, but it's still too early, obviously. But today, I've seen some things that could either be a very like uncovering basically some slick action from the institutes. Or perhaps it could also tell us what is fixing to happen with this judge order, because clearly some institutions have a head start already. So with that being said, let's get into looking into this. This is my SPY chart. I got some SPYs calls for Friday, due this Friday. But let's look at AMC right here. So with AMC, what I found strange, look at this open, okay? And I back it up with data. So At the open, right around 9:30 this morning, we had what was basically the bottom of the day, and it brought us down to about $4.18. What if I told you that today alone there is literally over 30,000 puts on AMC? Zero amounts of calls, and I'm talking about big money here. I'm not talking about retail buying 5 calls or 100 puts or even 1,000 calls or whatnot. No, this is like this company. When we hit that 418 level, there was an institute or a couple of institutes that piled up heavy. One of them even paid on one order $2 million worth of puts at the $17 strike price. So that's way too deep into the money, to be at the 17. I mean, each put cost them over $1,200, $1,200 to $1,300, and that's very, very aggressive. And that was like a movement of about in about 10 minutes, there was about 6 institutes. I know that it wasn't retail, 6 institutes that piled up on that $17 put due in July 21st week. So that not this week, but not the end of this week, but by the end of next week. Now, when institutes do stuff like this, they're normally expecting the move to happen way before the expiration date. So it's not going to take until the 21st of July. So there are 2 things to put in mind here with this. First of all, what do somebody know from an institute perspective that obviously we don't yet? That's 1. 2, buying that much into it reveals one card, first of all, for me. That 1, when people don't understand why the short interest drops, when it was like at 800 or 900 and it drops down to about 200% or 180%, this is exactly why. These institutes, and I can 100% guarantee all of you that for today, and at least for this upcoming week, and I'm going to continue to track this on a daily basis, as I've always been doing, they have been shorting AMC actually through buying put options, because when it's that far deep, so deep into the money, again, when you look at the July 21st options, like when you look at the options for the July 21st, you look that the furthest or the deepest in the money puts is the $17 strike price. Likewise, for the calls, that's the furthest out of the money for July 21st. So if you look up and you just open up your phone or your computer, look at the options chain, you look July 21st, you'll see that the furthest out of the money available call option is the $17. However, it's also the $17 put that is the opposite, which is so deep into the money. Now, when I see like one institute put $2 million worth of premium, $2 million, just one order, $2 million worth of premium, and then either that same institute or a bunch of other institutes logging in a bunch of 400, 500, 600,000 worth of premiums exactly at that strike price, which is the furthest, deepest in the money, in the money puts, and is due in less than 2 weeks, that automatically gives me the undisputed explanation that obviously they are shorting AMC instead of having to short it through actual physical shorting positions, which means they would have to, that would affect the shorting interest and all that other stuff. They're doing it through the put options, at least for now, because that way, 1, they get to bring down the short interest, 2, it's not as affected. So remember, puts are not necessarily shorts. However, if they're that deep in the money, they can act as shorts without increasing the short interest percentage. And that's very, very, very interesting. PV, what's up, brother? Did cost to borrow decrease? Maybe call AA called and asked them to reduce percent and called off the threshold list. No, that's the thing, PV. That's actually, that works right into my point that I'm making here. It's instead of opening more short positions uh, at this level where it's this low and they're waiting to see what the judge comes out to say, they're shorting AMC through buying deep in the money puts. And I seen these freaking prints on one of my resources. I've seen these freaking prints. One of them was $2 million at the $17 strike price for puts, which is the furthest or the deepest in the money you can buy inputs. And they're like, read the article, AB. Which article? Give me an article to read. PV being sarcastic. Alice, how are you doing? Which article do you want me to read? Is there an article that breaks out breaking news or something that I don't know of? Let me see. Nothing much. At least the price still holds. And by the way, most of these puts were opened right around that $4.25, $4.25, $4.26. So basically, these institutes don't want us to break that level because, again, when they purchased it exactly at that price, since that point, which we had the high at, I think it was like around 428 today, 428 and a fifth of a cent. Since then, we have not made a different high because they're piling up so many puts to literally zero calls, zero amounts of calls on AMC. And that, again, shows me like what these institutes are doing and how they're shorting AMC for now, since the short interest was just high, and which again is still high, cost to borrow is still high. They are shorting it through deep in the money puts, and I've seen these prints literally myself. Now, another explanation to obviously seeing that is having them expire that fairly early. I mean, when you put yourself in this position, even if you are an institute, okay, even if you are an institute and you got a bunch of money, let's say you put $2 million on something, and literally it expires in less than 2 weeks. What do you think that describes? I mean, if the cost to borrow is so damn expensive and it's hard to find real shares, because it looks like that's the case, what are they doing? They're literally paying over like $1,400 to buy each put that deep into the money to make sure that they're shorting us in another way without even showing it or affecting the short interest, which is pretty crazy to me when I see stuff like this. And it's like, wow, $2 million on puts that are due in less than 2 weeks. Two things: if it comes down from now until the end of this week, because they're going to move these options, they're not going to hold these until expiry, unless they just want to write off $2 million right off the books. Because that price is not going to be dropping to about 350, 340 unless they know something that the rest of the retail don't know yet, as far as what's happening with the court case. And that's very interesting to me when I've seen that. I mean, this is extremely rare to see, and I track AMC's option movements on a daily basis, nonstop. Normally, we don't even see nothing. I mean, for example, GME literally has nothing from as far as institutional wise going on, whether puts, calls, nothing. It's a desert. AMC normally will have one or two, and they're pretty low. Like, it'll be an individual that is piling up. Right now, it is the opposite. Today, just for today, there is over 30,000 puts purchased on AMC. And the biggest ones that stood out to me were the ones that are so deep in the money They were specifically by institutions that were purchased, and that was very, very, very interesting. And we're continuing to track it. This, again, like I've explained to you guys, this tells me, one, for sure, they're shorting us for now. They're keeping us in that price range, because as soon as it hit 944 in the morning, that's when that major $2 million premium worth of puts were purchased on AMC. And that's when we had our low of the day. That's when we had the lowest dip right after that, because it was a huge transaction. And it was followed by like 5 or 6 other ones in the next 5 to 10 minutes. And that's very crazy. That's very crazy. Like with premiums that are worth over $400,000 or $500,000. Again, they're all due before July 21st. That's extremely rare for me to see from institutions to be that bullish in such a short amount of time and put that much premium on the line for such a short amount of time. One, for sure, they're shorting it by doing that. Two, they are also probably knowing something from the court, like the judge's decision, ahead of everybody, and that's why they're piling up on it. And there's a bunch of other major big retail orders, like $200,000-$300,000 worth of premium on actual puts that are like a little bit out of the money. Like some are in around the $3.50 range, some are at the $4 range. And it's, again, interesting for me to see this kind of movement on AMC like this. So I'm anticipating something really exotic to happen this particular week, guys. Either in the after hours of some sort, maybe tonight after hours, maybe throughout this week, but I don't see it even taken until next week for whatever it is that is going to break out. Somebody's going to move those premiums around. They're not just going to sit until next week, until expiry on the 21st. Due to the fact that it's also OPEX week next week, so it's important. Let's see. Aliyah, how are you doing, my friend? Nice to see you. Thanks for reminding everyone to hit the like button, please. Mrs. Chase, how are you? Good afternoon. Hopefully you're enjoying your lunch. Alice, you posted the article above. Where is it? I can't see it. Hold on. Let me check. I'm going to also talk to you guys throughout what's happening with this market. What did the Fed's members say today? What to expect as far as 3 o'clock this afternoon? Also, what to expect on Wednesday, which is going to be the big day with the CPI data coming out, and ultimately with how some of the banks are going to be reporting their earnings, some of the major ones this Friday. Alice, I can't see it. Maybe it's because of the stream does not allow it. You can tell me like what it says. Just like give me a few, like the article's title, and then I can just search it on my side, and I can just pull it up. So let's see here where we at as far as moving with AMC. See, still stuck at that 421, still dancing around that range. I mean, again, there's so much, there's so many orders, like put orders, that are just holding it down for God knows for what's to be reported probably pretty soon. But it's pretty exotic. Like what I just reported to you guys and told you is pretty intense. That's not something that you see on a daily basis from my experience on AMC, as far as from the option movements, and more importantly, the fact that it's all due that early, like by the expiration of next week. And again, when institutes do something like this, that means they're anticipating something to happen way before that expiry. The only reason why it's until the 21st is because they need to worry about the intrinsic value of their options. And again, it is OPEX week next week, so it's pretty interesting to see that movement. Looking at the SPY right now, it's consolidating. Looks like I want SPY to close above 439 and some change, but 3 o'clock is going to be pretty crucial. I'm not going to lie. And we'll look at some of the charting and see exactly what we can expect. It's been respecting the support levels so far, and that's pretty interesting. All right. So what did some of the members say? What did some of the Fed members say? Well, of course, they come out and just, blow the smoke up everybody's butts, and they will say all sorts of things. Oh, inflation could be handled. Okay, let's see. Let's see what we have here. Alice. Okay, wake up AMC investors. Okay, I'll look that up right now. Aaliyah, when do we get the court case outcome? It's pretty interesting. It's either going to be sometime, there's no set time that they set. It could be all the way up till, like, this is the worst case scenario, all up till like the next 2 months. However, I don't think that will be the case. I think it will be sometime this week, perhaps at the latest, probably sometime next week. But that won't be it. Like, I just want to remind everybody to keep in the back of their head that even whatever it is that is reported, that there will still be time for that to really post, and it will take quite a little bit of time. So we'll see how that will work out. Wake up AMC investors. Let's look that up. Okay. So, all right. I just had a notification that my VIX order. Oh, we're gonna have to speak about the VIX too today, guys. Has went through. Yeah, Alice, that's exactly what I'm reading right now. But let me actually upload it here so that everybody else can also see what I'm reading. Second. All right. Can you all see it? You got it, Alice. So, and again, guys, let's read this with a grain of salt, okay? Whatever it is that we're about to read, and I'll react to it as far as what this article is about. So it says, "Wake up, AMC investors! The action in the ape ruling is about to hit." I'll be honest. First of all, I've never heard of this real money, .com. So with that being said, shares of the movie theater operator AMC have been stuck near the recent lows as investors await the outcome of looming decisive court ruling related to its AMC preferred units. For sleepy investors tired of watching this seemingly depressing plot play out, this is the time to pay close attention so you don't miss the action. What's happening? Okay. Delaware Court of Chancery judge will be ruling in the fairness of the settlement, which would allow AMC preferred ape shares to be converted into AMC shares, while the outcome in the Delaware court has dragged on, frustrating investors and arbitrageurs. The opportunity to capitalize is still palatable. Let's press rewind to see what the investors might have missed. Last August, split shares into common, blah, blah, blah. Create capitalization. They created APE shares to capitalize on the pre-approved authorization. Okay, AMC has issued over 400 million shares of APE raising desperately needed capital while diluting outstanding common shares. That did happen by around 40%. But even though a share of APE is equivalent to a share of AMC, there is yawning gap in price. This means the company has issued APE at a vast discount, causing far more dilution than if they were authorized to issue AMC stock directly. Here's where this real money company starts throwing exactly like blame at investors, at retail investors, and it's like subtle hits, like trying to fit that in there, like, oh, okay, if you would have approved their dilution for real shares before or any of that, then they would be not in this we would not be in this position where APE is actually being diluted at a lesser price, which is again could be so much further from the truth. To remedy the gap, AMC CEO proposed that last December to convert APE back into AMC, essentially undoing the split. Potential ruling from Delaware Chancery Court is imminent as early as this week after a shareholders vote in May approved the recombination. Pantera's vote. With APE trading around 185 and AMC trading at 425, there is still a remarkable spread for shares with the same economic value and can soon be converted 1-for-1 pending court approval. After watching the court proceedings, both B. Riley, who has financial interests in the publisher of Real Money, and Cohen see the likely outcome as an approval of the settlement by the court vice chancellor. The court's affirmative ruling will enable the completion of the original proposal combining AMC and APE that was approved by shareholders by a wide margin. The deal also authorized a 10-for-1 reverse split of AMC post combination. The analyst at B. Riley believes there ought to be a recognition by the vice chancellor of the settlement's benefits to AMC holders by allowing the company to raise necessary capital instead of struggling for solvency. The company likely needs to raise a tremendous amount of cash to repay debt, which again, this statement right here, the company likely needs to raise tremendous amount of cash to repay debt. That is equivalent. I mean, the translation to that statement is massive dilution. Massive dilution. Don't let any member out there or content creator out there to kind of try to remedy you this reality. If you're a person who cares about the price of AMC, the overall valuation of AMC, rather your own investment into AMC, if that matters to you, then you need to remember that what that statement right there says is that they need massive dilution to raise and pay debt that comes due or to purchase it at the discount in the open market. Riley is vaguely positive on the balance sheet improvement from the equity for debt exchange. Conversely, they do worry about liquidity risks without the ability to raise additional equity capital. Let's see. To end, I'm just going to skip that paragraph right there. While this arbitrage opportunity has a high degree of speculation, since it relies on the vagaries of the court decision, the opportunity of APE makes for a worthwhile risk versus reward. The likely settlement approval will create an immediate convergence of AMC and APE. To optimize the trade, arbitrage are long APE and either short AMC or long AMC puts. Yet, simply long APE could yield a quick 30 to 50% gain, while AMC suffers a 20 to 30% decline on the move toward parity. Very, very true. Okay. So we read that. Pabloco, what's up, brother? How are you doing? You got it, Alice. You got it. So we read that. Okay. So here's how we react to this. So actually, toward the end of that article, That's where you started seeing actual true data, which is, again, the people who are heavy ape are looking at, if this was settlement was to be approved, they're looking at obviously an uprise or a profit of anywhere between 20 to 50% on the way up, as ape will basically go up in value. If that was to be approved exactly in that sense. And this is where here's my AB's input. While that is true, to me, as far as AB, Frankie Muhammad, what's up, brother? Assalamu alaikum. How are you doing? Keep doing the great work, brother. I keep hearing you, and I watch all your stuff. So keep doing what you're doing, brother. So, anyways, what AB's input is there is that when personally AB got into AMC, AB was never looking at 30 to 50%, kind of thing. However, I always advocate for leveraging yourself. Always leverage your positions, and no matter what you get into. Of course, I've explained many times, and I've said many times, because I don't have nothing to hide, what exactly my plan to do if either case happens, whether the reverse split goes through completely as advertised and no revisions to it, or it doesn't go through. I have two plans for either side. It goes through, AB is not worried. If everybody cares about a 50%, 60% gain, guess what? AB is not going to come out. And I'm not a financial advisor to advise any of you guys to do whatever. You do what you feel like you need to do. But at the end of the day, AB is not going to walk out of this as a bag holder. I can just assure you this. Did not wait 3 years to walk out a bag holder, or to be a 5-6 year extra on top of this holdler of whatever this stock is. I'm not pressured. I'm not doing anything, but my money can be made. One thing for sure is the stock market will always be around. We, as humans, as individuals, we don't. So valuable time out of your life that you can never get back. The way I see things, the way people see things, the way you see things could perhaps be different. And that's totally fine. But for me, I've been in this thing since September of 2020. My plans are not to be changed no matter what happens with this. And plus, even if the answer or the outcome comes out in the aftermarket at some point, in the very next day, a lot of people think that they can react to it quick and go ahead and try to get out or get in and all that. And I can tell you this, when this corporate action happens, for instance, hypothetically speaking, if AMC, if the judge was to approve the reverse split and the news break out in the after hours, could perhaps be today, could perhaps be tomorrow, but sometime this week I'm anticipating something to come out due to the crazy movement of put options that were purchased on AMC that are due next week. However, hypothetically speaking, if it does come out in the after hours, people think that they will be able in the morning to get out of their positions, or even in the after hours to get out of their positions or get in or whatnot, however way you plan to go about this based on whatever news come out. I just want to let you know that most brokers will have a corporate action proceedings up on the announcement of the news, and therefore it would keep the stock from being traded until everything gets worked out and everything is done. So you are to be experienced by now, all of you. You've seen it happen with BBIG when Cryptide basically was done. You've seen it happen with a bunch of other stocks. There's always a corporate action that would happen that would prevent people from trading the stock until it goes after. Now, AB, again, this is why I've mentioned personally what my plan was, is even if that was to happen and to go through, AB would still be holding his stuff, because if hypothetically speaking it goes through just like the way it does, many entities would have to cover and they would have access to shares. I mean, there's going to be massive amounts of dilution, which brings down the price. However, many entities, and especially shorts, would be so interested in accumulating these shares. That's if they haven't already piled up on APE, because a lot of retail members of the community think that they're the only ones who were using this arbitrage opportunity and all that. Never thought about the idea, or most didn't think about the idea that it's actually the institutes that piled up on ape even more than retail. And those are stats that you can go and find as facts. So there are more entities that are actually hoping for the arbitrage or the reverse split to happen more than you do, even if you are pro conversion and reverse split. There are institutional backers that want that, need that. And I broke so many times in the past what could happen as the Trojan horse theory. Ape would act as the Trojan horse that goes into the AMC so that shorts could have actual access to shares that will be minted after a conversion to cover with. Now, that's long gone. It's in the past and all that stuff. We're in the phase now where whatever is going to happen, you have to react to it. Do you have a plan for it? My plan, I said it simply, is I'm holding through no matter what. I don't see this thing going down the way that they want it, exactly the way they want it. Otherwise, it's like probably one of the biggest money heists. Like the show Money Heist will probably need to be, the next season would have to be about AMC, in my humble opinion. But even if it was to happen that way, I still have my backup plan for that. I know that many entities will be covering. So even if dilution is coming, many entities will be more than thrilled to accumulate so many shares and go ahead and close this, which would do what? A natural rise in the price. Now, where people don't understand, many people don't understand, is that when shorts cover, that means MOAS, and that's exactly where they're wrong. It depends on what. That's what they fail to look past, or probably see, or maybe understand. Maybe they've been trading only for a few months or a year or two. When shorts cover, if they have access to shares from anywhere else, whether through the company, whether through the open market, whether through anywhere, if they have actual access to shares to cover with, then it defeats the purpose of a MOAS, in my humble opinion, because they can go around you. They can go around me to get to those shares. So what killed them, for example, back in January of 2021, when GME ripped up, what easily killed them, and this is a fact, I'm not just telling you my opinion on this part, what killed them is that they had no access to shares. And they had to get it from the people who were holding the shares, whether institutes or retail. And majority of the people that were holding at the time were retail. Now, what even made it more crazy is that people were, like the Redditors and Roaring Kitty and all his clan, were also exercising call options that were so deep in the money because of the sudden rise in GME's price that ultimately made the market maker also go and hurt his own self and hurt shorts within their own gimmicks and stupidity. So that's what made it fly to that $400 range and all that stuff before, and it could have even went much higher had they taken the buy button away and obviously suspended the trading on those, like the buying on those stocks for those days that they did it for, and back in 2021 in January. So what people don't get is that the way that I see this whole thing, and it's basically we all want the same thing. We all want to make money, right? I think where we differ, all of us, is on the expectations. What expectations? My expectations for this play is MOAS, nothing less. Many people might look at this play as a prop-up play, something that they can make 20% on, 50% on, maybe 100% on. And that's amazing for them because they love to see that $2,000 portfolio go up to $2,700 or $3,000 or even $4,000. And that's like a big come up yearly for them. Jam Bams, what's up? How are you, Jams? Yaka Frida. Haven't seen you in a long time, huh? Yaka, I'm going to delete your comment. I'm just messing with you, bro. Mr. Number One Son. How are you, sir? Well, hopefully you're having a great day at your at work. Hopefully it's a smooth shift. So many blessings sent your way, my friend. Let me see 1 second. I need to check and just double check and see where the SPY is and all that stuff. Okay, perfect. So that's basically what I wanted to get out to you guys, is that if AB and again, people are here in AB Investments channel and you want to hear what AB's opinion is. I've said it many times before. Split goes through, reverse split and conversion, no problem. I have a plan for that. No split goes through and all that, then it's business as usual, as I've got into this position since 2020, September of 2020. So therefore, it's gonna be nothing's gonna change. I already have my plans. I already have my vision on what's gonna happen and how it will roll out. And you know, may the Lord bless us throughout what's yet to come. Again, it's all about expectations, and I want to let everybody know, even if you're a yes or if you're a no. Again, while all that is behind us now, I want you to remember, even if either case happens, let's say you're a no and the yes goes through, I just want you to know that it makes no sense to sit there and start blaming, because at the end of the day, this is not a one share float, a company. This is the float on AMC, which is 500 million plus. So this is a collective thing. I could see the community got compromised with all of this. Now where we at? Okay, we can make an argument about that. Some other people could come in from the other room. I don't want to say the side, the other room, and say the opposite side of the room and say, hey, no, this is good and all that stuff. And they don't see exactly how that works out. At the end of the day, everybody at least is holding AMC for now. I know that there's a lot of people that actually did sell all their AMC, and the reason why they're so rigorously and very vigorously are wanting this reverse split / conversion to happen is because they own 0 AMC shares. They went and piled all that into their ape load up or loading zone. So if you did that, again, I have I don't feel any type of way about you. You know why? Because at the end of the day, you're making decisions to do what's best for you and your loved ones and your family. Now, your decisions, every decision has consequences. If the opposite happens, for example, and the judge does not approve this and the news comes out that way, AMC rips, ape falls down, you have nobody to blame but yourself at that point, because at the end of the day, you walked in on this play on your own and you made decisions on your own and at your own accord. No one have forced you. You went and did what you did. You fought for your reasoning, and you got to live. You raised the sword and you got to live by it, however way it comes. And that's basically all I have to say about that reality. I'm not going to be upset if the reverse split goes through a conversion. I have my plan, smooth. I'm a trader. I trade the market regardless. AMC was not my only play to jump into this. I'm teaching people on a daily basis things about how to trade, day trade, things about options, things about the stocks, things about literally everything that involves the market. AMC has been my storage bank that I've short everybody with a few other meme stocks. GME is one of them. I have a huge position in GME, and I always say this. It doesn't change nothing for me what happens with this. I do have a plan to act on it. That's why I always average down, and I've always used the market to pile up on my positions. Now they decide to go through with this reverse split. I have a plan. Just like everybody wants to come out a winner, AB does too, and so do you. No matter what that win is, if your expectations were for life-changing wealth, hey, if that comes out as a yes, guess what? Life-changing wealth doesn't mean if you get stopped one place, that means you get stopped forever. No, way far from the truth. You've learned so much about this market in these past 2 years. Of course, the corruption and everything, but you got so many more opportunities to make what you got to make And I understand the expectations are down, just like my team. If I was in a sports team and we lost a game, so what? We didn't lose the season. That's the way I react to it. In the same time, have your contingency plans and stick to them. Don't emotionally trade. So that's what AB is with. The reverse split goes through. I already know what I have to do. I'm going to act on it. Nothing's going to take me away. And I'm going to live by the consequences of my actions or my decisions. And if the reverse split doesn't go through, everybody else that decided to either pile up too much, too heavy on APE, or even sell their AMC positions to load up on APE, then also these people would have nobody to blame but themselves. They can't blame AB, they can't blame you, they can't blame anybody who did not approve or did not want this reverse split to go through. Because at the end of the day, you do what you do, I do what I do, and let the market do or figure out what it's going to do about it. Origin stories. My thing about the yes voters is that they are wrong. It will hurt my financial situation, whereas if no voters are wrong, nobody loses money. And that's the thing, origin stories. I get that general sentiment. I feel the same way. Why do you think I've been advocating for the past many months, ever since that reverse split was announced and they wanted to propose it and all that stuff? I said what I had to say. The people did what they did. People reacted the way that they wanted to react. And now it's beyond us now. Now we just got to basically, we've done all our work, we put in all our chips, and we'll see what's going to happen. And however way it's going to come, we do have to come to face with it. All of you have to come to realization with it. All of us have to. No matter what the outcome is, we all have to come to a point of realization of what the situation is, and obviously react on it. It's not the end of the world. It never will be the end of the world until it's your last breath. I feel you. I feel you. I'm more than anyone. I feel you more than anyone. I lost my voice plenty of times trying to preach on the channel for a long amount of times, and my tonsils were almost taken out just, trying to explain, not to give advice, but to explain what are the remedies or the opposite of that with all these filings. And my channel speaks as an advocate since I started it, since back in early 2021. So I've been doing my due diligence, and I feel like I've earned my stripes to be within the community, entrenched within the community, because I have been consistent since then, since 2021. Not just like holding my shares since 2020, but I've been speaking since 2021. I have not left. I've not gone anywhere. I've stuck true to all my beliefs and what I say and all that stuff, and to my guns. And I have more faith in my maker than people or in the market or life. At the end of the day, we're all creation, not the creators. But at the end of the day, like I told you, origin stories, have a plan. Have a plan for either case scenario. I advise, this is one thing I can advise for sure, since it's not financial advice. Have a plan for either case scenario and try to stick true to it, because at the end of the day, the secret code to in all trading, doesn't matter whether it's a meme stock, a non-meme stock, a MOA stock, a non-MOA stock, the key secret and code to unlock the market is to trade with no emotions. Literally, that's all it takes. When the second and the minute you don't trade with emotions is when you realize that your positions and your overall situation throughout your portfolio is getting better and better, and it only will take just time before all that is revealed in front of you. We have, in about 37 minutes, we have the credit consumer report going to be reported. So that's going to be interesting to see how the markets react to that. We're trading within the channels that I love seeing. Overall, Wednesday is going to be the most important day throughout this week as far as the CPI data coming out. That's going to be the most important thing, or the highlight of this week. Now, what did some of the judges say? What was important that the judges said that actually created some shockwaves throughout the day today in the market? One thing, and you probably see in this article in the background. Let's look through it. Let's look through it. Banks with at least 100 billion in assets could face higher capital limits. Now, let me explain to you why they're specifically saying at least 100 billion. Now, there's a list that is called the SIB. And what the SIB stands for is a systematically, what's the right terms? The systematically in, hold on. Right there. It's a systematically important bank. Why is the SIB stands for systematically important bank? Is one that if it fails would likely cause failure of the entire financial system. Bank can be designated as a SIB or on a national basis or on a global basis. Now, banks like JP Morgan, for example, JP Morgan is definitely a SIB on the SIB list. Now, SVB was also on the SIB list. However, the way that the feds handled that one and the Treasury, how they came in and kind of like, hey, we'll take care of you here and there and all that stuff, and it's not done yet. This right here, what was talked about right here, and the proposal that the Fed member Barr have proposed this morning is pretty interesting at the very least, because if a bank with 100 billion or more in assets was to fail, then it would instantly affect the other big ones. And this is what we've been talking about in the past months, and what I've been telling you guys as far as how the banks, the bigger ones are eating out the smaller ones. You guys probably can call us some of the members in this channel that kind of follow through every day or every time we post a live or a regular video. You could remember or recall AB saying that, hey, months ago, bigger banks are going to step into the picture and they're going to be consuming the smaller ones. The smaller ones can't live in this higher basis point era where the Feds is very aggressive. So some are going to fail, which is good for the big banks because it makes them come and pray. You saw what JP Morgan did when they went and bought First Republic for just, what was it, $10 billion, 9 point something billion, and they basically profit off of that. Now, they're making the trend that this is exactly it, but I told you back then that bigger banks are going to do this. They consume the smaller ones. Next thing you know, it's going to get to a point where the bigger banks are going to say, we tried to play Superman and we put the S on our chest, and unfortunately, now we are too deep and we need your help. And that's basically when the Feds will go in and do their magic of doing bailouts and all that stuff. When you see something like this, and this is a proposal so far, when he says here, when Barr said banks with at least 100 billion in assets would be subject to a similar regulation that banks with 700 billion in assets currently face. What do they face? These regulations could force these banks to hold an additional 2 percentage points of capital, or an additional $2 of capital for every $100 of risk-weighted assets, Barr said. Now, this gives you a couple of images. One, wow, is it that terrible? Are our banks, what brought down 2008, when we saw Lehman Brothers, they were way over leveraged, $44 to each $1 they had in asset. Now, keep that right there in this tab in the side of your head. Now, open up a separate tab on the opposite side of your head and read this right here. So they would be required to hold an additional $2 for every $100 risk. So the risk that these banks are in, and this is a proposal. So basically, right now, banks are way out leveraged and over leveraged and whatever you want to call it. Then even in 2008, and now they're making a proposal where they want them to be at least for every $100, they want them to have $2 on their balance sheets, and that goes for the smaller banks. Only currently the bigger banks that are like 700 billion in assets and more are subject to that. Now they want the smaller ones to be subject to that as well, which we know as at these rate hikes, let alone when they hike another one or two, they can't handle that because they're completely over leveraged. Which, what would that do if these were to be imposed? If this regulation right here that Barr is proposing, what would that do? You're probably wondering. Well, one, it's going to force the smaller community banks. It's already hard to get a loan regardless, let alone try to get approved for anything or a mortgage. However, if these things were to play out like this, it will be damn near, you could say it will be impossible, no matter what your credit rating is, to actually go and get any money, because now the smaller banks, instead of lending out their money and putting them out there and giving it out left and right, not only do they have to watch for bank runs now, learning from SVB, but on top of that, they have to hold whatever cash they have to a certain level, like this $2 for every 100 that they are lending out or putting out or leveraging out, or however way they're going about it, or invest out. They need to still hold that much in, which means it limits their ability to grow, which in other words also limits, it cuts the funding possibilities to retail or to citizens, / it will limit the growth of the economy. And that, in other words, when if these things get imposed, then that's when you would know that we are already in the midst of that recession, in the midst of a recession, however way a global recession similar to the 1920s, perhaps, to happen if these things were to be implemented. Excuse me. Let me look here and see what we're looking at. Captain No Likey, how are you doing, my friend? Okay. NP JPK Hookahs is my plan. I got that in the background. Now, also, let me run some data by you guys. Okay, let's look at some interesting things here. I want to show you guys, or let you guys hear what situation, where are we currently right now? What are we in? Take this. Commercial Chapter 11 bankruptcies. There were 2,973 filings in the first half of 2023. This is data that I wrote down, so it's good data for you to entertain your thoughts with. So basically, there were 2,973 filings in just the first half of 2023, a 68% increase from the 1,766 filed in the same period of 2022. Now, everybody remembers that 2022, that's when the entire market was supposedly going through that bear trend and the prices was low, truthfully, and all that stuff. However, it's very weird that first quarter of 2023 happens to be where many more Chapter 11 bankruptcies have happened. Then 68% more Chapter 11 bankruptcies happened in the commercial sector than in the first quarter of 2022. So moving on. And individual Chapter 13 filings, these increased by 23% in the same period. So 23% more individual Chapter 13 bankruptcies have happened since for the same period of first quarter of 2023 compared to first quarter of 2022. And this is supposedly the bull market that we're in, right? Also, overall commercial filings, there were 12,107 filings in the first half of 2023, an 18% increase from the 10,258 in the first half of 2022 alone. Small business filings, there were 814 filings in the first half of 2023, a 55% increase from the 525 in the same period in 2022. Moving along, June 2023 filings. Commercial filings increased 12% to 2,123, and commercial Chapter 11 filings increased 9% to 404. Subchapter V elections increased 111% to 198. Total bankruptcy filings, there were 217,420 filings in the first half of 2023, a 17% increase from the 185,352 in the same period in 2022. Individual Chapter 13's filings, there were 85,390 filings in the first half of 2023, a 23% increase from 69,000 in the same period of 2022. That shows you how terrible that the market has been numerically, or backed by data, has been so much worse than even in 2022, which was regarded as a barrier. Now look at these numbers. These are really interesting numbers for you. So the total household debt has risen by $148 billion, or in other words, 0.9%, to 17.5 trillion in the first quarter of 2023 alone, which means that number is so much higher now. You could say that it's above 1% easily, since it rose by 148 billion just in the first quarter of this year. Then we're, by the end of the second quarter, it's probably going to be a lot worse. Mortgage balances climbed up by $121 billion and stood at 12.4 trillion at the end of March. This is where we had that, when people are asking, what is our debt coming from? It's not just money that, they're rolling out. All these trillions that you're hearing right here, that has a lot to do with our debt ceiling. Auto loans rose to $1.56 trillion. Student loans rose to 1.6 trillion. Credit card debt is at over $1 trillion. And again, all this is reacting at the end of Q1. All these numbers are even much higher when Q2 numbers get updated into it. Now, one thing I want you to know, that in some places I've seen people react to this, which is good, is that the student loan repayment begins in October, causing more stress on many people already, that thought that Biden was going to get them, looked at like he was going to look out for them. But clearly that's not the case. The Supreme Court said no. And many people have different agendas and views about that, because many people believe, and it doesn't matter which side you're on, I'm not here to argue that, but many people believe that that was a ploy from the get-go, that his campaign have advised or gave to the people or promised to people, so that he could get election votes. And obviously after was in office, it's a different case scenario. And again, that's a narrative that is floating out there. But however way you view this, family, is up to you, whichever side of the fence you're on. But that is just important to remember, that that's out there. And at the end of the day, with all that stuff, you still got to remember that the SPY's doing great, and it will still continue to move for all-time highs, which makes zero sense, right? But it is what it is. What's up, Marco? How are you doing, brother? Indeed. Let me change the view from this article and switch over to all right, one moment. I'm just switching it to the chart. Let's look at some charts. I know people love here. I know the family love looking at the charts. and asking about certain questions about certain stocks. All right, here we go. AMC is at $4.24, creeping up. And while we're looking at that, let me also look and see what happened with the option flow. Let's see what happened with the option flow. Are they piling in on AMC, and what are they piling? Wow, finally, some calls on AMC. Some calls on AMC. Family, this is exactly how they're keeping us down. They're literally like buying crazy amounts of premiums. Again, there's over 25,000 puts purchased in the money or just a little bit out of the money, which is retail at that point. But so many institutionalized slash maybe shorts, obviously, in this case, because they're not, that inflicts to the cost to borrow or the short interest. The other way for them to short the stock without having to pay borrow fees and cost to borrow fees and all that stuff is they could go ahead and just buy so deep into the money puts, which is what they're doing here today, clearly. And like I said, like one of the orders from an institute was $2 million worth of premium at the $17 put price that is due before July 21st. That's short right there. That acts as a short. Because as soon as that order went in around 9:44 this morning, I looked at the chart, and that's exactly when we had our low of the day. The market reacted instantly to that transaction. It's interesting to see how all of it is due so soon. You just don't see that. It just does not happen like that in the corporate world. All right. So let me look at Tesla still down a 1.8%. Where's the VIX? It's at 15. Another thing that is very important here is, let me show you guys this. This is the VIX option chain. Now, I told you something about OPEX week. I explained, if you're just coming in now, I'll tell you again, OPEX options week is the expiry week of the options, which is next week. When that event happens, it tends to give out volatility. When volatility happens, where do you look? At the VIX, at the volatility index fund. And when you look at that, you could easily see here on the, let's move away from the 12. Let's look at the July 19. Okay. And then I want to look at all the strike prices. Okay, perfect. Now this is the July 12th. Actually, let's look at that. You got, scroll to the side. Let's see if this gives the option to scroll to the side. It doesn't. I can extend this right there. So this is the VIX. By looking at it, I'm looking at the, let me see where the strike price right here. You got, of course, no open interest on the $100 strike price, because who would be that wild or crazy? As you can see here, the open interest is basically what is out there and what is open. You got volume with the open interest right here, implied volatility, implied volume, blah, blah, blah. And look at all these numbers here at the open interest. This is interesting. This is due July 12th. As you can see here, nothing nothing sticks out, even all the way up to the 33 strike price, which has 10,000 call options. Now let's move over to July 19. Look at this option chain. Let this sink in right here. And this is just the calls. I will switch over the screen to puts. When you see here, you got like even the 16. Look at the 15, and the strike price has over 88,000. Let that sink in. Over 88,000 calls. The $16 strike price has over 98,000, and then it starts going up tremendously from there. I mean, even going over to the $20 strike price has 270,000, over 270,000 calls. Look at the 22, has 290,000 calls. It's mind-boggling to see these levels or these amounts on this options chain. Now look at the puts. It's not like it's anything different. Look at that. The options chain is so stacked up, but clearly here it is so much more stacked up to the call side than to the put side. So, and all that is for the July 19th week. You go away from that and you look at July 26th, and you'll start seeing here that all that talk starts changing. There's almost nothing. It's like an abandoned put and call, or options chain. There's not much compared to what's happening next week, and that gives you the idea. That tells me, see, again, many people will look at that and say, what's happening that week? Well, if you don't know, I'm telling you now, it's OPEX week, which is expiry of the options. And that's why when that stuff like that happens, there tend to be a lot of volatility. And when a lot of volatility happens, the VIX starts moving wild, up and down. So thought that it would be interesting to bring it up to everybody's attention, to see exactly what the hell is happening outside of, our lovely movement or our lovely stock. Let's see here. The SPY on the 2-minute. You probably see lines over here that I've drew. These are all levels of support and resistance, and levels that we have to stick through. How would I react if we break some of these levels or these lines? It will be crucially important. As you can see here on the 15-minute time frame, this line right here I drew a while back, and we're still sticking with that trend. They barely tried to get us under today, but it didn't respect, like the support was respectable, brought us right back above it, and now we're dancing in that range. As long as we close today above this line, I'm very happy. Again, we got the credit consumer report soon. In about 12 minutes it's going to be reported. I think that's going to be interesting, to add a little bit of volatility for the end of the day. I mean, the volume is at 38 million. I anticipate that when the CCI report comes out, then probably that volume will go up to about probably 50 to 60 million just in that 1 hour alone. We'll see how that happens, and hopefully it's in AB's case here, hopefully it's to the upside. I don't want us to break this channel to the downside, because then we would have to be, testing that 437.01 level. That's what I drew. And eventually, if we break through that, we will have to recorrect, perhaps retest the 431.19 level, which was a level that if we look on a larger time frame, that's the same level that, if you remember, about a week and a half, 2 weeks ago, we were here. We did this move down here, and it was a Monday, June 26th. It was a Monday or a Tuesday where I've told everyone that this is the level that we have. I made a live or a video back then. Some of you could remember that. That this is the same level that we launched out of, and we have to respect the support. Otherwise, at the time, all this action wasn't there. So it was like this. It looked like this. We were coming down here. A lot of people at that time, thought that the SPY and the S&P 500 were going to drop tremendously, and they could have corrected if we broke underneath this level. So I was watching that. I saw that we made on that Tuesday a firm rebound off of this level, which means that support was respected, and eventually we moved in. We made a move to the upside, and eventually got us to. By that Friday, we literally moved from 431 to 444 by the end of that week, right before the 4th of July movement. And then, after 4th of July, we had this gap down, which resulted in me making another live and telling you guys that we were having to fill these up. Now, we didn't necessarily fill this gap completely. As you can see, this was Friday's move. That was weird as hell, because we were moving slowly, then suddenly we started having a bullish movement. All the indicators were hot, very hot, sizzling hot, overbought. And when we got up to here, literally just about 50 to about 65 cent short of filling completely this gap that we had here from last week. Unfortunately, obviously, in that same day on Friday, leading to the close, which is like the last hour and a half, we just had a massive sellout that brought it down, which right now, leading us to today and this moment, let's go back to the shorter time frame, leading us to this moment where we are consolidating slowly and slowly to perhaps come back up and close this gap. And if we get to this point and we close this gap, then we will be retesting the 445 levels. It's a very important thing to remember that this is the level that we met before, about 444 and 30 cents. That's the level that we met and we got rejected off of. So if we do rebound and we continue with this channel that I've drew here to the upside slowly throughout the week, maybe on Wednesday we're going to get some solid news on the CPI data. China have reported theirs, and it was very good. It looks like they are stabilizing inflation. They're hurting elsewhere, and we'll talk about that in a different video or live. And if we continue to climb up, it'll be very important to see what happens in this level. If we break through the 444 level, and obviously if we meet 445 and 59 cents and break through it, that will indicate to me that we are going to continuously keep making that move or those strides toward breaking the previous all-time high, which was 468 and some change. We get to that, then my theory from months ago would correctly be happening, and we'll see how that will occur. Now, what are other notable things that are happening? We got a bunch of heavy call options being purchased on Rivian today. There's some crazy stuff happening with Rivian, I guess, and I don't know, maybe we can find it right here and see what they exactly say about it. But as you can see right now, it's at 25.44. The high was 26. This is pretty huge movement today for a stock. It looks like it's winding down, but we'll see what happens in the last hour. But Rivian shares are volatile. Monday, the stock is up more than 20% over the last week and nearly 75% over the last month. Here's a look at what's driving the action. What happened with Rivian began picking up momentum the end of June amid strength across EV stocks, which we all know about. But here's where it is. Rivian said it has produced 13,992, we'll say 14,000 vehicles in the second quarter, up from 9,395 in the first quarter. The company reported second quarter deliveries of 12,640 vehicles, up from 7,900. That's pretty impressive. So that basically the market is incorporating all that news in. Now we also have an interesting Tesla situation where we have their earnings being reported. Let me see. I think it's in the 20th or something. Their next earnings report is July 19th. And it's going to be after hours. That's going to be very interesting, people. So for my Tesla fans or lovers out there, that's to be looked at for sure. Let me see. SPY still respecting that. AMC 422 still. So, what questions do the family have for AB? Is there any stocks people want me to look at? Is there any questions that they have regarding anything? Oh, man. AYP, how are you, my friend? Well, I'm glad to be a source of that. Hopefully, in a very good way, for sure. Good hope. Remember, dear family, at the end of the day, uh, well, thank you, KYP. Thank you. At the end of the day, what happens is already written in the stars. I always say that saying. So I don't ever um, overreact to any situation, because unless it's your death, it's not the end, no matter what it is. And this is by all means not like, this is a statement that is very, where this is coming from. This is coming for both people, the ones that said yes to the vote and no to the vote and whatnot. I want everybody to be at peace, hopefully, with their decisions and what they have done. They have done what they can do. There's nothing else that we could do, within our personal powers, except continuing to speak the word of mouth. However way you feel, no one can tell you what you can and what you can't say. This is what's so great about our world, and this is what's so great about our country here in the United States of America, is that we still, at least for now, have that right. And speak what we gotta speak. Don't ever let anybody bully you out of what you feel or how you feel about something. It is what it is. You say what you say, they say what they say, and let the world move on with it, and do what it wants to do about it. If and I like to always say, if it's us humans who dictate what happens in this world, then the world would have been over a long time ago. We wouldn't have made it this far. And that is a reference to how I feel that obviously God controls everything. If we were in control of everything, then we would have ended this beautiful world a long time ago. Also, on that note, I'm going to watch that voice Sounds of Freedom later on today. Zen Holder, what's up? The ruling did not happen yet. Some people have some ideas, but the ruling did not happen yet. Look at that. I'm loving this. See, guys, this definitely 100% gives me the understanding of what they're doing. Instead of shorting us nonstop, which comes at a cost, like short interest, paying borrowing cost borrow fees and all that stuff. Instead of having to do that, what they're doing or what they have done today in this past few weeks, but mainly starting today, how they were able to tame AMC is through, and this honestly, by all means, this makes me feel like the judge is going to say um, the opposite of what everybody thinks the sentiment is. Honestly, and this is my honest opinion, because the fact that these institutes piling in millions of dollars, and I see this like on these option premiums, and they're all due like next week, puts so deep in the money that does raise the question as is that a way for them to short AMC, which 100% that's the way for them to short AMC, because when you buy puts so deep into the money, you're technically you're operating as shorting the stock instead of having to go and open up a short position. And that's an interesting way, insidious way by them to do that. So, but I uncovered that. AB saw that for you, and we see what they're doing. That's how they're able to keep AMC, at least for today, and perhaps this week or until the news is reported, down or tamed, maybe until the after hours of this some day throughout this week or tonight. That's a very interesting way to open up a short position without having to be subject to a short position and having to get obliterated, because you can lose the premium money on puts, but that's all you're subject to. Your max loss is capped. That's why they go with the puts. It's shorting when it's deep in the money. Puts is shorting the stock. It operates as and acts as shorting the stock, but your max risk is limited to just the amount of the premiums. However, if they went and shorted AMC actually with a short position, we know that they've loaded on for the past 3 years. They've done plenty of that. So they, this is a way for them. This shows me that this is a way of them trying to make sure that they don't get crucified even more on that. But for the meantime, they are okay with maybe perhaps losing a couple of $1 million, a few $1 million here and there on put premiums expiring. And perhaps also, since if the price was to go, since that they're that deep into the money, that could be exercised. They could also turn that. They could lose the premium on those puts. They could lose that $2 million. But again, institutes have crazy amounts of money. They can short the stock now, given the inclination to keep the stock barricaded within a certain limit until after hours or pre-market of some sort, or until the time that they find it best. And then they can, if the price starts tremendously to rise, they can start exercising those puts and basically buying those shares at a small, basically at a small amount if AMC was to start moassing. So it's an insidious, smart plan by them. I hate it because it's shorting our stock, but I know for a fact that's what they're doing today. Let's see what happened with the credit consumer reports. Looks like they came out. Excuse me. Calendar. The forecast is 20.25. Last month it was 23.01. Let's see what they're going to be now. Indeed, Yaka. Indeed. Indeed. Paul, what's the breaking news? Well, the beginning of the stream, my friend. The beginning of the stream. Hedge funds are shorting AMC through buying deep in the money puts. At least are all uncovered tickets for today. And I just got a notification that some other order just went through. Let me see who just got some calls or puts on AMC. Some more puts. $150,000 worth of premium at the $4 strike price. They bought it at $4.21. Again, all these options are due pretty soon. It's not like nothing is like, expiring way later in the year or the next year or whatever. No, it's due this like within this month, basically. Come on. I'm waiting on my app to update the consumer credit report numbers. Let's see. If you guys have any questions, put them in put them in the chat while I'm search the credit consumer report. More puts added on AMC. That's the data that I'm getting right now. May's consumer credit up 1.8%. Revolving credit up 8.2%. Non-revolving credit down 0.4%. The crazy part is the consumer credit, non-revolving credit, which is basically auto, student loans. It tumbled first negative print since April 2020, and we know what happens then. But I still want to see the actual data, well, not just broken. Paul, they're definitely expecting that. That's one thing for sure. That's another thing that we spoke about, Paul, is that not only are they shorting AMC through these deep in the money puts now, one, they get to do it without having to risk opening short positions, at least new ones. That's one. Two, they could also exercise these puts if it was to roll the opposite direction and then basically buy these shares in case AMC goes to crazy amounts of prices to the upside. Plus, since they're all due before July 21st, then you're spot on. They expect the judge to make her decision sometime this week, and perhaps in an after hours decision, or in the pre-market before people can obviously trade, not throughout the market hours. And as you guys can see, in the 15-minute time frame, we're still in that channel. That's pretty good. So on the 30, it's a little too risky on the hour time frame. You can see it's like we're right underneath it, but we're still respecting the 437.01 obviously level on the greater time frame. That's the SPY we're speaking about. Now all this is basically prepping. The best part here about this today is if you see, we'll draw a little line for you guys here. Since our low of 437.59, we have been making higher highs, which means I can't wait to see how we respect this level right here. We stay within this channel. Look at this. We got a bunch of doji candles, which signals for a change of trend. And now I'm anticipating that we respect this line right here around the 438.89. We're dancing on it right around it, and perhaps bounce right back up after this candle closes. Interesting times. Volume still at 40 mil, pretty dead. We'll see now probably in the next 20 minutes is going to be moving up quite a while, quite a bit. So the consumer credit reports, oh my. So it was previously 23.01. It is, the forecast was 20.25. The actual was actually 7.24. Interesting. Before 4 o'clock hits, I have 3 orders that I want to close through. I'm trying to add some more to my Mara. Whoa. Looks like I missed that train. Yep. Like both moved up in a very tremendous way. I got some puts on PayPal. Okay. Look at that. And I tell you, we'll respect this channel. And now we're bouncing right off of it in a mighty way. Hopefully the candle closes up that big. Look, they're eating, they're chopping all that down. We need to respect this blue line that is moving upwards. Stop it, bears. I am a bull on the SPY for this week. Yes, that's what I like. Rebound, come on. Come on, bulls. Yes. All right, dear family, I'm gonna go ahead, and it looks like there are no questions. Feel like there's a few things that I wanted to cover, but I forgot about them. We were speaking about so many different things. So I want to go ahead and take this final chance for the last 30 minutes or 45 minutes to overlook my positions and see if I want to open up some new ones throughout the market. I'm waiting on an order to fill through for also GME, some more GME. So uh, let me see how that basically goes through. And then I might come on again tonight after I go watch that Sounds of Freedom. It's a crazy movie. I've seen the trailer for it. Um, it looks like it's gonna be very, very like the problem is like movies like that, they strike a chord in AB's emotions, you know. I don't like two weaknesses I have. I don't like to see kids crying or women crying. Those two things. Anything else, it's another day in this world. But those two things, they affect me in a different way. Um, have I seen? Much love to you too, Alice. Have I seen GTII and Finger lately? No, I have not. Should I? Let's go look at it. Let's look at it. Uh, well, Finger looks like it's in the midst of some crazy action. Let's get this going right here. Look on a larger time frame. Oh yeah. Oh yeah. Yeah, on the monthly time frame, right here back in June 20th, that's when AB would have opened up a position in this thing if I was gonna get in it. When it was around $2.45, 42 cents. Um, as obviously it has more than doubled in price. Why? Because it had the moving averages of the 50-day have crossed the 200-day moving averages, which leads into what have I taught you guys? A golden cross. And a golden cross clearly here happened. And since then, you saw what is happening with Finger. Uh, Finger motion is definitely doing some finger action to some shorts for sure right now, currently. Um, However, don't use the craziness right now and jump like YOLO into this stuff. I mean, at the end of the day, everybody does what they want to do, but the levels are so far extended as far as like on a larger time scale. As you can see, the RSI here is at 70 or 68. This personally, if I was to get into this thing, I would wait for a healthy little pullback before I could get in. The thing is, it's like so far I don't see any gaps in this thing, which indicates to me that if it does come down maybe to right here, but I mean, again, I don't see that happening anytime soon yet. I mean, since June 30th, if it does a pullback, it will pull back to around $3.01 to if it needs to correct. If it doesn't correct, then this thing could still be primed to move more to the upside. I'll just personally be waiting for a better area to get in than this valuation. Or most of the times, whenever I see something like this, it's already, for me, I always look at it as it's too late to get right back in. However, if we look on the day right now, it's right around the 200-day moving average, which means it looks like it's by 3 o'clock. It either breaks underneath this, which indicates more red action coming in, maybe perhaps in the later parts of this week, or this thing could come back to meet by the end of this day the 50-day moving average, which we all know, as I've told you guys before, that any stock always tends to stay close to its 50-day moving average throughout its trading hours. It can kind of like stretch away from it to either side, whether to the upside or to the downside, but it eventually always finds its way back to meet it. What do I mean by that? Here, you can see here, 50-day moving average is this red line that I got for you over there. You can see that this thing stretched out to the upside from it, and throughout today at around 10:23, you see how it came down to meet that 50-day moving average. It danced around it. However, throughout the whole day, it stayed above the 50-day moving average, hovered around it until these moments right here, where it actually did drop, to the opposite end of this thing. So let's see. That will be interesting for you if you're into finger. Just pay attention to that. See if there is more down movement. You could expect that through seeing if these it still looks healthy and primed to continue move up. If you already had a position, look here. It's crazy. Yesterday they literally had, or sorry, July 7th. So on Friday, they tried their best attempt to bring it underneath the 200-day moving average. You can see that long wick right here. Pretty exotic move. And there it was unsuccessful, denied by the bulls. And as you can see, you guys are now in total control again, and it's moving up still. So on a larger time frame, I see that you guys are still in control, and it doesn't look like it is doing anything. Like if anything, it will do a healthy pullback to around the $4. Let me draw some lines for you guys. This is the first level of resistance right there. So about $4.80, 83 cents is going to be some major support there. If it breaks underneath that, then obviously your last resort is going to be at that point around $4.18. Below that will be a confirmation to the downside and eventually ending this upward movement on the stock. To my humble experience in this, that's how I see it. Now, if it doesn't do any of that, then you're continuing. It looks like the stock is continuing to do its thing. GTII. GTII actually is in a very interesting position. Okay, looks like it already had just crossed today the made a golden cross. So that's pretty interesting. It did it actually on Friday, but the confirmation was today. This is an actual very bullish stock right now, in my humble opinion. For everyone, I like the setup. It's still early. I see huge upside to this GTII stock right now. So let's see how it fares, or it ends up going about its business. Excuse me. That's the clean break right there. Interesting. So yeah, this one is a lot more bullish in my opinion, GTII, than Finger. Because Finger to me is just it's already a little bit late, to get into that position. Seeing that, I mean, any stock could always go many more hundreds of percents to the upside. But I always like to get in and not chase. Get in a good position, in a good spot. The RSI is very oversold. I'm gonna, however, wait for a little bit of a more pullback, maybe somewhere around, I mean, it's still in a very good range. but it's very bullish right now. GTII is very bullish. I like this. Thanks for bringing it up, Paul. Stevie, did you miss the breaking news? Well, yes, kind of, but not really. I can you just watch from the beginning, you'll see it. But it has a lot to do with how they're basically keeping AMC today down without opening new short positions. They're opening short positions, but as deep in the money puts, very deep in the money puts, and they're all due by next week. So these people either know exactly what the decision is going to be, or they're trying to set themselves up to contain the stock for now until the news gets reported or advertised, to everybody in the after hours or in the pre-market, so that corporate actions can go in and prevent people from just opening up crazy positions in stocks. So, but in the meantime, that's how they're doing it. They're putting millions and millions of dollars that are all due next week, and far deep in the money puts. Crazy stuff. Stevie, you welcome, brother. Welcome anytime, man. Anytime. All for the family. Alrighty, people. Paul, you welcome anytime. Anytime, anything for the family, as always. We're all here for each other, right? All right, my loved ones. If he's gonna go spend the last 30 minutes just overlooking his positions, making sure that everything is, squeezy tight on everything. Hopefully everything goes great. Do keep an eye out in the after hours for some news to circulate. Again, something 100% will happen from now until early part of next week. But I'm more bullish on the idea of the news coming out this week, sometime in the after hours or in the pre-market of some time, seeing these heavy positions being opened on AMC. Now, with that being said, you know what to do. Tomorrow I might come back to you guys as well and do another stream and day trade, actually. Wednesday's CPI numbers, that's the most important day of this whole week. That will dictate how crazy this week will be, or how even the next few weeks will be, even though it's earnings season up on us. We have Friday some major banks like JP Morgan, Bank of America, many of them reporting their earnings. They're probably dismal earnings. And next week we have OPEX options expiry week, which means a lot of volatility. I've made the case throughout the stream. If you haven't caught it, please go back and look through it. You'll see where I made a case for the VIX, which is the volatility index, for next week. It's through the roof. It's crazy. So a lot of crazy stuff are expected to happen with OPEX. Within the market this upcoming week as far as volatility, and of course CPI dictating. If it comes out to be better than anticipated, then they will definitely be, it will dictate how by the end of the month, by the 28th, they will go ahead and either add more rate hikes or not. And tomorrow perhaps I can actually give you guys an outlook on everything to look forward to from now until the end of the month, as far as on a daily base. Who's going to talk, what's going to talk, who's going to come up, what data should you look out for. And if you keep these things in the back of your head, or always trading with these things around you in the back of your head, you're always not going to be surprised. The odds of you being surprised, oh, red day in the market or green day in the market, that will start dwindling down, because you know what to expect, knowing that something like the CPI is coming out today, or Fed members are going to be speaking out today. So you would know, you would be ready to react, or you'll be ready for whatever is to come, whether it's bear action or bull action. With that being said, appreciate you, DB Tavares. You have a great day as well. I have to catch up with my tickets to go watch that After 4, I had to go watch that Sounds of Freedom. If you haven't watched it, please go watch it. It's a great movie for AMC as well because the budget on it, as I've seen, was only around $14 million. And so far in this first week, it has generated over 45 million. And that's very good. We need those movies. Unlike The Flash, unfortunately, which is so far has been labeled as the biggest bust of all Marvel movies of all time. And some are even going to the extent saying that Warner Bros. Are actually losing an estimate of around anywhere between 150 to 200 million dollars on The Flash. Yikes. Other great movies, great mentions is the Insidious, The Red Door. It looks like it's doing. It was a scary movie. The ratings are good, but the sales on it is even much better. The budget was very low on it, and the earnings on it so far have far exceeded its expectations, in my humble opinion. So those are very good movies, profitable movies for us. Um, Harrison Ford's Indiana Jones was very costly on the 220 to 250 million dollar budget for that movie, and so far it's barely right above making that money back. So hopefully it can continue to do some more work and can make a lot more money. Otherwise, it looks like it's not that much of a of an upper for us. But I love those little movies. And again, Sounds of Freedom. It's a very good movie from the trailer of what I've seen. It's a great topic for us for the world that for the kind of world that we live in, especially now that you're seeing all these settlements being flown around with JP Morgan and Deutsche Bank and all that for all these victims of what's his name. In the wake of all that, we have that movie. And from the trailers I've seen, I will react to you guys. I'll tell you guys what I thought about the movie afterwards. Maybe I'll go on live tonight, perhaps if time permits. And who knows, maybe I'll go on with Mike on in the float. Not to put him on the spot, but if there is time, we might make that work or happen. If there is no time, then I'll react to you guys tomorrow in tomorrow's live or tomorrow's video. John Singus, why can't you rewind? I don't know. Maybe because we're still live. I don't know. That's weird. I'll log off now and then you'll be able to watch it all. Let's see. Darren, what's up, Darren? What's the news, brother? Well, I've said it through all of this now, and feel free to go right back, Darren, and say it. I've literally reset it like many times, so I gotta go and get ready to go watch the movie after this next 20 minutes. David Stevens, thank you as well. I will, if you guys have any questions, put them in the comments section after this video posts, and then I'll look at them. If there's ticker symbols you want me to look at, I can look at them. If you have any other questions or even your own thoughts on what you thought about the stream of what you have downloaded, and you have any thoughts about it and you want to share them, please put them. I encourage everybody to do so in the comments section afterwards. And with that being said, enjoy the rest of your day. I'll catch you guys on the markets on the battleground tomorrow. And make sure you go watch a movie. All right? With that being said, much love, AB Investments.